Good morning. It's the 9th of December. I'm Joe Neighbour from Signal Centre talking ball this morning. Hope everybody is well. Steve, thankfully, is on the mend. He may be joining me shortly. I've sent him the invite link, so hopefully he will be filling up to it today. But in the meantime, I'm going to get stuck into the latest headlines. So, quite a big day for the UK yesterday. The Prime Minister Boris Johnson tightened pandemic rules to curb the spread of the Omicron variant, advising people to work from home and mandating the use of vaccine passports in large venues. The so-called Plan B represents a significant change in approach and is very politically risky for Johnson at the moment, and the timing is also very sensitive. For those that have been following the latest news in the UK, they will know that Johnson's government is struggling to handle the backlash over allegations his officials held rule-breaking parties over Christmas last year. In terms of the latest update on Omicron, the scientists suggest it's 4.2 times more transmissible in its early stages than the Delta variant. That's according to a study from Japan, and finding likely to confirm fears about the new strain's contagiousness. The restrictions are being imposed globally. After a rise in cases, Jefferies, the big investment banks, asked its staffers to work from home and will require all employees to get a booster for their vaccine by the end of January. So pretty tight restrictions and rules being put in place by some of the big companies. Denmark introduced a light version of a lockdown that it had last winter as well. In terms of efforts to tackle the Omicron variant, Pfizer will have data telling how well its vaccine prevents infections with the Omicron variant before the end of the year. So hopefully that is good news. The company is looking to data on the vaccine's performance from health providers and other sources to give a clearer picture of its effectiveness. Now, moving attention to markets, it was a bit of a mixed affair overnight. Stocks in Hong Kong and China gained over 1%, but the Japanese and Australian markets traded in the red. It was a bit of a mixed one on the European front as well. So obviously the change in policy with regards to tackling the new variant in the UK, or the Plan B that's been put in place, is likely to dent economic projections going forward, and this may now alter the state of play for the December BOE meeting, with many members likely to hold off now until February as a result. So we've expected over the last two meetings from the Bank of England that they would in fact hike interest rates, but it now looks like that's going to be kicked down the road. So let's get stuck into some charts. I'm going to start off with FX just in case Steve does just decide to join and he can take up the reins on some of the other markets. But this is the dollar index. Yesterday we saw quite a reversal actually. So on the 7th of December we posted this doji looking candle here, but yesterday we backed that up with some further declines. So a little bit of uncertainty and nervousness around this at the moment. I mean, typically it is seen as a bit of a safe haven. So I would expect that it is going to find its feet pretty soon. Bit of a triangle pattern forming there maybe on the daily chart. So a break to the upside, and we'll be expecting a continuation higher in line with the dominant trend, which is bullish. A break to the downside, and what we may see is a continued correction down to that 94.74 level down here. And also this fib level, 38.2 fib level at 94.47. So we cannot rule out a move into to be a nice test of the lower end of this bullish channel. So overall, the outlook would still remain bullish overall on a move down here, but that would probably be a nice sort of consolidation for us to then maybe move higher to the upside over the coming months. So ultimate upside targets are up here at 97.72 and above that up at 100 for the dollar index. So taking a look at Euro US dollar, given that we saw a bit of weakness in the dollar yesterday, you'd expect to see a nice green candle on Euro US dollar yesterday, and that's what we got. So we've seen a little bit of a move off of the lows, a little bit of a consolidation here. I think more importantly, what this may be a good thing for anybody that's looking to buy Euro US dollar is that we've actually put in place a higher low. So it's obviously very early stages, but we haven't made a new low on this move down to the downside, and we've got a nice push up higher over the last 24 hours or so. So potentially some evidence that we could see a corrective move up to retest this previous support, which is now resistance at 115.25. Overall, the trend remains bearish. I wouldn't be getting overly excited and positioning for any sort of major turnaround in euro US dollar, but in the short term, there could be some opportunities on the speculative side of things. Looking at cable, that didn't do an awful lot yesterday. In fact, what it did do is test this 38.2% fib level. Just going to scroll back a little bit further just to show why that level is relevant. So from these lows back here in March in 2020 all the way to these highs that we posted in January, we posted a nice double top there. We broke down, we've continued to trade within a bearish channel, taking out supports along the way. But now what we've done is actually nailed this 38.2% fib level. And as you can see, if you were on this on the intraday charts, you could maybe have taken advantage of a bit of a bounce there and a bit of a reaction off of that level, because we closed well off of the lows of the session yesterday. Bit of green on the chart today, only 0.02%, so very mild. I don't anticipate any major shifts in trend as a result of this hitting of the 38.2, but what it may do is see that prices could consolidate maybe around this kind of zone. So we may see a bit of a bounce in the very short term, but overall the outlook continues to remain bearish. Looking at euro sterling, that had a decent push to the upside yesterday. Obviously sterling getting a bit of a hit on the back of these new restrictions that have been imposed by the UK government, and as a result we saw euro significantly outperform sterling yesterday. So this is quite interesting because it is approaching a previous swing high level that was posted here on the 5th of November. So far, that's done a job of rejecting price and capping the upside advances. It remains to see whether or not it's got the legs to continue above that. But just to be aware, slightly above those highs, we've got this downtrend line, the top of this bearish channel. So again, we may see some selling interest in and around this kind of region here, which would prevent any further upside in euro sterling. So keep an eye on that. Looking at some of the riskier currencies today, Aussie US dollar continued its bounce yesterday. There was 3 consecutive days of strength yesterday that we posted. A bit of red today, nothing overly concerning, but we have broken out of this short-term downtrend channel. This was pretty much in line with this support level here at 71.05, although we did see a fairly sizable reaction below that level, but we're back above it now. So expecting more choppy price action. I think given the severity of this move to the downside, we could see a little bit of a reaction higher in the very short term. So keep an eye on that. I've got that 38.2% fib level there, but obviously that's no longer relevant because it's taking the measurement from the high of this right shoulder down to this low here, which was invalidated here. So we now have a 38.2% fib level, a bit lower down at 73.36. For me, that would be a reasonable area to target on a corrective move to the upside. Okay, let's move on then to cryptocurrency. So Bitcoin yesterday, bit of indecision over the last few sessions. We are seeing a little bit of weakness today. So we posted this doji candle on the 7th. Yesterday, again, a little bit of indecision, no real direction either way, but a bit of red today. So this 78.6% fib level at 45.891 did do a job, although we did see an overextension of that on that flash crash that we saw on Friday. So maybe we'll see a retest of these levels in the coming sessions. Clearly, in the very short term, there is a little bit of a downtrend that's forming, but overall, I think the long-term trend still remains bullish and intact. So this could just be a period of consolidation and sideways price action for some of these cryptocurrencies. If we take a look at Ethereum, that continues to look actually quite strong compared to Bitcoin. Yes, it's trading in a bit of a range in the very short term, but we're not too far away from the all-time highs here. I was looking at short trades on this earlier in the week just because I felt we were probably going to see more range trading price action, and it looks to be the case actually. A bit of red today, almost engulfing yesterday's gains. Little way to go before we close out the session, obviously, and whether or not that actually confirms itself as an engulfing candle. But for now, more sideways price action, I think, between these ranges of 3885 to 4867. Moving on to oil, that continued to bounce from the recent lows that we posted. I'm still targeting this 74.84 level, which is this resistance level here. That would be kind of an underside test of this broken channel, but also kind of retested the point where we saw that breakdown last week. So interested in seeing what happens at that point, whether or not we can get back in the channel and start to target the previous highs again, or whether or not this is going to be a chance for the bulls that are still locked in oil to offload their positions into this strength and potentially start initiating fresh short positions. So I've been talking about this maybe being a top pattern. And I think, if that is going to be the case, we probably need to see it stall somewhere around this level. So from a risk reward perspective, I think this would be a pretty good level to initiate some short ideas. Then we'd be looking for obviously this move down to the potential neckline that we're talking about, and then maybe even lower from there. So something to keep be aware of, I suppose, when it comes to oil, and whether or not we are going to see some sort of top formation take shape here. Let's take a look at gold. Not really much going on. Again, nothing in session yesterday. I keep saying this with oil. There's just gold. There's just not much of interest on this at the moment from a technical perspective, at least as much as I can see anyway. So be careful if you're trading this, because I just don't think one, there's enough volatility for you to get in and out of it comfortably, and two, I just think the moves are a little bit erratic and range bound. So steer clear of that, I think, for the time being. Let's take a quick look at silver. I imagine the situation will be quite similar. Yeah, in the last few sessions, not really much going on. We do have a major support line here, actually. So just get rid of that. At between 2166 to 2190. I think if we start to break down there, then we've broken out of this large range that's been containing price for a number of months now. And that would be a pretty bearish sign, I think. If you're looking at this from a technical perspective, when we're looking at ranges, we look for the sort of entire length of the range, project that lower to give us an indication on where price could potentially go on the downside. So by measuring that range and projecting it lower, we're looking at prices as low as like $13.45 for silver, which is a significant drop in value. If we take a look at some fibs on that as well, so I'm going from the low, just for anybody that's watching here, in March 2020 to the high that we posted here. We had a little bit of a look above that resistance before failing, and seeing if we get any sort of marry ups on the fibs. I mean, the 78.6 is a pretty severe pullback, and the target from this broken range potentially would be a lot lower than that. Occasionally I will have a look at the 88.6% fib, because that's kind of last chance saloon. If you see anything down at the 88.6, if the fib levels are to be respected, that's kind of the last line in the sand, and that can have sort of a catapult effect whereby you see the 88.6 here, and then you see a decent move to the upside. And as you can see here, we're pretty close here on a confluence basis between the 88.6 and that measured move of a potential broken range. Hasn't happened yet, so it's all speculation at this point, but something to bear in mind when it comes to silver. Let's take a look at the indices. So FTSE will be impacted by what we saw yesterday with the new restrictions. Typically, a weaker sterling is good for the index because there are a lot of multinational companies in the FTSE 100 index that benefit from weaker sterling, such as the oil companies and some of the major banks and mining stocks as well. So we stalled just in front of these previous highs at 74.05 yesterday, posting a doji candle. A little bit of red today. If there is any follow through to the downside, then we may have an evening star type formation set up, which would be quite bearish for the short term. Overall, the trend remains positive, so we can expect higher prices, but there is a stiff level of resistance here at 74.05 that needs to be overcome. So we'll wait and see what impact these restrictions have on the mindset of traders, and we'll obviously start to hear more rumours about what we think the Bank of England are going to do on the 16th of December, which is next week. The DAX stalled into this 15,863 level yesterday, posting a bit of reversal. Actually underperformed a lot of the other indices yesterday. Posting some more red today, down by 0.2%. This was actually my gun to the head trade yesterday as well. I sold it into that 15,863 level and made a decent return on that yesterday. Is this going to follow through to the downside? Remains to be seen. But again, I keep talking about these kind of rounding top formations that are maybe taking shape here. Again, speculative to call it at this stage, but something to bear in mind. And when tops start to form, and bottoms are generally processes that take a while to mature, you often see these long periods of sideways consolidation before then an eventual break, and that will be the sign that the long-term trend is now under threat. No immediate threat with that on the DAX, but we have hit some resistance here at 15,863, and while that remains in place, we could see a little bit of weakness in the short term, so bear that in mind. Looking at the US market, so we saw a little bit of stalling in the Nasdaq yesterday, following that really big impulsive move to the upside that we saw on the 7th of December. I posted a doji yesterday. The futures markets are indicating a flat open today, so a little bit of indecision here. We've got the all-time high is not very far away at 16,768, so that doesn't have to do an awful lot to get to new highs today. So we may see a little bit of toing and froing, whether or not the market can decide if it wants to have that next push higher. But overall, clearly the trend remains very bullish, so it is a case of looking to buy dips, I think, on this market. S&P 500, similar situation, stalling just in front of that all-time high. One push today from the bulls and an improvement in risk appetite, and we're going to see new highs on the S&P 500. Dow Jones underperforming a little bit, posted again a doji yesterday following two really strong days. Bit of red today, down by 0.25% as it stands at the moment on the futures. So it remains to be seen what happens. It looks fairly similar to the DAX actually, and that we've got quite a potential here for a top formation to take shape. Again, early calls on this, and by no means a guarantee, but something to bear in mind. We are potentially going to see a prolonged period of sideways price action. But again, we're not too far away from the all-time high. So if we do make new highs, that would kind of invalidate that theory that we're in the process of building a top, and we'll have to kick that theory a little bit further down the road. So that's it from me on the market side of things. We will do something more comprehensive, obviously, when Steve's feeling up to it. But let's move on now to the gun to the head trade from yesterday. As I mentioned, DAX was what I was looking at, and I got a 1.4R win on DAX yesterday with that short-term call. Just bring up the chart just so everyone can see what that was. So yesterday I was selling into a resistance level that I spoke about on the daily chart actually. So just going back to that quickly, this is the daily chart. This was the red line that I'm talking about, the 15,863. It was into that level yesterday when I did this video, which is why I initiated the sell. And yeah, worked out quite nicely. Seemed to have formed some very short-term support here, which seems to be holding at 15,681. Still looking ultimately for a test of this support down here, this previous range, as you can see, which was broken out here. If we get a nice retest of that, then from a technical perspective, that's quite an interesting sign. So do I continue to back this and hope that it goes lower? Just sort of moving these risk reward bits around. If I went short now at 15,687 and had a stop loss above these highs that we've posted over the last few hours, that will be a stop at 15,770, targeting a move down again to the retest this previous range. That will be at 15,466, 2.66R. So do you know what? Rather than flicking through charts, if I had a gun to my head, that's probably what I'd be looking at. Ideally, I want to see a breakdown below this support, but I'm going to try and preempt that today and expect a little bit more weakness in some of these indices, despite the fact that overall they look quite bullish. Okay, so that's my gun to the head trade for today. In terms of data that's due out at 1:30, we've got, sorry, at 1:30 a.m. that was, we overnight we had China CPI numbers. At 1:30 today, we've got initial jobless claims expected to fall to 227,000 for this week. So that's pretty much it. Pretty light on the calendar today, actually. I think it will be a case of all eyes on the central banks later in the month. Next week, we've got on the 15th the Federal Reserve taking action, or certainly, they've got the press conference and the decision on what they're going to do on tapering. And then on the 16th, we've got the Bank of England addressing their own bond buying programs and the latest move on interest rates. So that is it from me today. I'll be back tomorrow to finish off the week. Hopefully Steve will be feeling up to it too. In the meantime, everybody, I hope you have a great day and get some good wins on your trading account. So until tomorrow, take care. Goodbye.